Hello, everyone. This is Kathy.
Hi, guys. Hi, everybody. Good to see you. Nice to see everybody's coming in. It may not be the biggest event risk ever, but it's definitely the biggest event risk on the calendar this month, which is why we're trading it. And there's so much pre-positioning going on right now, so many different scenarios. Kay's going to go through them with you. It's very exciting. I'm very, very excited to set us up. Really looking forward to trading this. Should be a lot of fun.
So, Boris is right. Sometimes non-farm payrolls is the number to trade, the number to watch. And oftentimes it still is one of the most market-moving numbers. But when you are in an environment where central banks around the world are obsessed about inflation, the inflation report, naturally becomes the much more market-moving release. And what's really exciting about trading today is that not only do we have the inflation report, but we also have the U.S. retail sales report and the Empire State Manufacturing Survey coming at the same time. Now, of course, this makes trading a little trickier because there is so much going on. But, I think that it also gives us, more color and more opportunity because retail sales is an input into the GDP report. And at the end of the day, all of this boils down to what it all means for growth. So that is why everyone looks at, retail sales, inflation reports so closely. Now, the Empire State Survey is important too, but of course, it's going to take on lessened importance today because of, the inflation report. But normally, the reason why the Empire State Survey is so significant is because it is, if you look at this, it's for the month of May. So it is one of the first indicators that we get for the new trading month, whereas inflation data is for April, retail sales data is for April, and even the non-farm payrolls report is for April as well. It says Powell, who spoke yesterday, was not that dovish. And he specifically said that inflation has been higher than thought. And he expects rates to hold steady. And he reiterated on Tuesday that inflation is falling more slowly than anticipated, likely keeping interest rates elevated for an extended period of time. We did not expect this to be a smooth road, but these inflation readings are higher than I think anyone expected. Okay, so what are these inflation readings? The Fed watches two things. The Fed watches CPI and PCE. PCE is the price consumption expenditure, and CPI is obviously the consumer inflation rate. So is he suggesting to us and dropping a hint that maybe these inflation readings are higher than I think anyone anticipated? Oil prices dropped a lot, pretty much from a high of $87.50 down to $79 a barrel.
If you look at a decline, there was a very, very steady climb all the way from basically the beginning of the year all the way to 80. And gas trades on a lag, on at least a month lag. So if just from my personal anecdotal experience, gas was $3.45 a month ago. It's quoting $3.65, $3.75. It's not horrendous. It's obviously not going to pinch consumer spending much, but it's 20 cents a gallon more than it was a month ago. That's clearly, I think, partially inflationary. And that may translate in CPI. In other words, there could be a lag in CPI that could actually have an upside surprise. Just a thought as far as gas.
So the bottom line here is that it can go either way. It could go to the upside. It could go to the downside. There's arguments for both cases. And one of the other things I talked about at the beginning of the week of Monday, Caffeinated Buzz, that all of you should be attending because it's completely free, streamed on YouTube, is that the dollar strengthened in the month of April. The dollar index, let's get this up here, rallied in the month of April. So this is April in the dollar index. And when we have a strong currency, that tends to drive down inflationary pressures, which is why, central banks, usually if their currency is too weak, they get, really alarms, like especially if inflation is high. The Japanese, obviously, the currency is very weak, 30-year lows, but they are less alarmed because they've been fighting deflation, not inflation. They haven't seen inflation really manifest itself in a meaningful way yet. But the rally in the US dollar in the month of April drives down inflationary pressures. But let's talk about our trading plan. And in order to talk about our trading plan for today, we have to talk about what is priced in. What does the market think is going to happen? Well, you can see from the price action of the dollar index that the market has been selling dollars in anticipation of it. From the price action of euro, that the market's been selling dollars in anticipation of it. For the price action of gold, which is at the highest level in the week, almost the highest level in a couple of weeks, market has been selling dollars. Dollar yen is finally beginning to show a little bit of weakness, and dollar Swiss is also showing a little bit of weakness. So across the board, we see, even in U.S. yields, that the market is preparing for a negative number. Today's CPI, retail sales, and Empire State Survey affect Fed rate decisions. So let's imagine that the data surprises to the downside. So the data surprises to the downside, core inflation rate, and when I say surprise the downside, we kind of need every single one of these to surprise the downside. I don't care so much about Empire State, but we need the headline number of inflation to be lower than 0.4%. We need the core inflation rate to be lower than, to be 0.3% or lower. And we need retail sales to be 0.4% or lower. Although if it's pretty much 0.4% or lower or 0.3% lower, that's pretty much in line. That may not be very dollar negative. We need it to miss to the downside. 0.2 in the core inflation rate, 0.3 in retail sales, 0.3 in the overall inflation rate. At that point, if we get that, we should see a sell-off in the dollar. But the sell-off may not be that deep, and the sell-off may not be that durable. And the reason for that is because if you think about how people will think afterwards. The next Federal Reserve meeting is not until June. I believe the next Federal Reserve meeting isn't until June 15th. And between now and then, we will have the PCE deflator, we'll have another inflation report, and we'll have the employment non-farm payrolls report. So we'll have three really important measures before the June FOMC meeting. And, the market certainly doesn't expect the Federal Reserve to move in June. So there's actually a lot of data sets that are going to come out before the July meeting and the September meeting where the market really thinks the Federal Reserve is going to lower interest rates. So what are we looking at in terms of trades? Well, there's a couple of opportunities that I'm looking at. First and foremost, if we do get a dollar bearish number, the trade that I like the most is dollar Swiss. And the reason why I like dollar Swiss the most, and let's pull up dollar Swiss over here, and I'm going to put back on my indicators here. I like dollar Swiss the most because, first of all, it's not dollar yen. Dollar yen is like an animal and sometimes just sings its own tune and could have hyper volatility. And because tonight we get the Japanese GDP number, which is expected to be weaker, potentially weaker yen number, a potentially, weaker dollar number. It makes dollar yen a little trickier to trade. Although I do think dollar yen will still move to the downside if we get a weaker number. But I like selling dollar Swiss if we get a weaker US number. I also like possibly buying euro. Euro has just peaked itself above the 100 SMA. This price action shows that it's not sure if it wants to stay there, but we had stronger Eurozone GDP numbers overnight. We had stronger Eurozone industrial production numbers overnight. So I like that as well. And we're already short dollar CAD. I don't love the fact that dollar CAD, the low stopped right at the 50-day SMA. And this proves to you that SMA matters, that support and resistance matters. But I think that between the strong Canadian data, along with the weaker US number, that if we get a dollar bearish number, dollar CAD to move to the downside. And we're already in this trade for our swing trade to the short side. So dollar Swiss is my favorite short if we get a negative US number and along with euro. If we get a stronger US number though, I like selling euros. I like selling euros because this resistance is flimsy. And also, the ECB is expected to be the next major central bank to potentially lower interest rates, especially after Sweden's central bank lowered interest rates. And the language that we've been hearing from the ECB suggests that they very much are thinking about lowering interest rates. And it's just like the Federal Reserve. We heard from Powell yesterday, and he seems really, worried about upside risk to inflation, it being stickier, and his comments are definitely not dovish. The ECB has been suggesting that, they could lower interest rates. And I don't think we can ignore that. For those of you that have the kahunas, pound should also move lower because the BOE has been very vocal in the last 24 hours saying that the market is not pricing in enough interest rate cuts. And so that is also an opportunity. But, I prefer euro to the downside if we get a dollar positive number, maybe even dollar yen to the upside if we get a dollar positive number. Although I think, euro dollar could really be the trade.
Well, we're looking at gold, NASDAQ, and the S&P. Those are going to be the three primary instruments that we're going to be trading. Do you know what everybody's looking for? People are looking for 0.2 on core retail sales, 0.3 on core CPI, 3.6 on year-on-year CPI. Look at this. So right now, as you can see, I have three charts open over here. We have gold on the bottom. We have the S&P in the middle. We have NASDAQ. And by the way, all of them are starting to really, really correct. So let me just run you through the initial trades that I did so you guys can kind of understand what the trade was. This is NASDAQ. I'm going to get a little bigger on the candle so you can see it. NASDAQ was obviously very hard to execute. There was a lot of delays here, trying to click the buttons, but I was able to get in off the first minute candle because it was clearly a positive response. I thought there was some continuity there. So we got in at 27, got out at 37. That was a $200 trade, nice and clean. Then, as I saw, basically what you see here for price action is you're not making any fresher highs, right? We're still making higher lows over here. That was actually relatively bullish for a while, but then we kind of died. And this was the first lower low, right, in NASDAQ. Now, all of this was happening, was still above the moving average.
So when we're not sure how the market is moving, or you're not sure how the market should be moving, what you should be looking at are bond yields. Because usually the treasury market, the largest market, has the greatest and the best insight into what should be the interpretation of the data. And U.S. 10-year treasury yields are down 1.5% right now. And so it tells us that the market still interprets this to be dollar bearish. And it tells us that they still think that there's justification for an interest rate cut by the Federal Reserve. And so that's what they're thinking. That's what they're feeling. And so for now, we've got to respect that. We also see the same sentiment in stocks. Stock futures are up, Dow futures are up well over 150 points right now. And with stock futures up well over 150 points, that indicates the market still thinks low interest rates, lower interest rates, whatever it is the story. So I think right now that the dollar, that the Q from stocks and the Q from bond yields is negative dollar. So I think dollar yen, 155.33, euro dollar CAD, we sold at 136.20. We're still short dollar Swiss. I think that it's right now for the day trades, that tells us that is maybe the right direction to go.
Now, because you see the yields going down, that's why she's short dollar, because she thinks that they'll be
dollar. 100%. That is what I was trying to say, and I hope that is something that you guys really, really take away.
Just so to kind of let you guys know, so this is my super scalper indicator, which obviously I don't really trade yields, but it's just to show you kind of interesting. It narrates a story because these little dumpster fires tell you it's telling you hyper short-term selling pressure, right? And now what's interesting is it's really a tale of two cities. So yields are hyper negative; they're bearish, dumpster fire emojis on them. When you go to gold, it's the exact opposite. It's rocket ship. It's going to the moon. So same kind of idea. Remember, lower yields is positive gold because gold is a non-yielding instrument. So if yields are going down, people are much more likely to plow themselves into gold. Gold has actually been going up irrespective of any fundamental factors. It goes up when a dollar goes up. It goes up when dollar goes down. But when dollar goes down, gold really has a huge amount of rocket fuel behind it. So you see all these rockets, signaling to you that it's an up trade. That's
what Boris really wants to talk to you about today is, trading futures, trading prop.
When you're trading futures, the futures are traded on exchange. They're traded on the Chicago Mercantile Exchange. So regardless of what futures firm you're trading with, the price is the exact same price. Not only is the price the exact same price, as you'll see when I make trades, if I'm the highest bid and the first timestamp, it doesn't matter that there's literally $10 million behind me. There's a much bigger order behind me. I get executed first. It's a first come, first serve basis. It's a very, very democratic system in terms of structure. And that's why, I think obviously the futures prop space has just been inured completely, that hasn't been affected at all by any of these issues because the execution is all very, very transparent and clear. You know exactly where the trades are booked. And more importantly, it's just it just gives you an enormous amount of clarity to know that there's just a single price. You're not going to get, one broker has one price, another broker has a different price for the exact same thing. Furthermore, I bet many of you didn't know this, but literally every single CFD, so NASDAQ, US 30, gold, oil, all of the CFDs that you are seeing quoted, they're all quoted off the Chicago Mercantile Exchange price. The CFD brokers are making a synthetic price instantaneously, not just like I'm talking about microseconds, based upon the combined price of the Chicago Mercantile Exchange futures. What they like to do is they'll average out a couple of months worth of prices inside of it just to see what the book is. So literally you are trading the futures price, whether you're trading CFDs or futures. That is the price that gets set. That's why you never see a situation where futures go up and CFDs go down. They are completely correlated because one is dictating the price of the other. The price level themselves may be different, but the price direction is never different. So those are key things to remember. When you're looking at futures as a product. This is S&P 500, right? Let's look at this. We have the S&P 500, and we talked about the idea of the construct here. So I said, want to see a lower low over here, right? However, as I said, I don't like to short these things until we get a consecutive lower lows. This was a higher low. This was a lower low. This is a higher low. It's telling you that the market is just not really, really confident in one direction. You want to see a confident market is where you have all highs or all lows. This is a very sort of a not confused, but uncertain market. We are definitely starting to pull away, right? So if I'm looking at this candle over here, and by the way, here's another trick that you can do. If you're not super, super confident on the construct of a trade, just make it a small one. Like sometimes I'll just go micro. I'll go micro because, I want to vibe out my trade. If I want to vibe out my trade on the sell side, I'll vibe it out here for for tiny little moves just to see how well my thesis is holding up. So this is, all lower lowers. Now it's starting to really, really make some lower lows moves. Let's see if now I could get short this, but I'm still going to do it on a micro contract just because I don't want to be in retrace risk. Okay, so I'm short here, and it gets done right away, right? I think it got hit right away, didn't I? Yeah, it was super fast. So we could have done it with a large contract, but again, when you want to practice this move, when you want to practice this entry, you want to just do it on a small contract. Just get your tie. It's like hitting a forehand, or more importantly, hitting a forehand. Really, you need the timing. You need to be completely confident. Okay, I got the setup. I'm going in. I got the setup. I'm going in. And when you do that, you can see that, with 5-10 times an hour, you're in a rhythm. You spend an hour doing this, all of a sudden, 10 trades at $50 each average. Some of them are 100, some of them are 50. Let's say $50 average. That's $500. You're done for the day. You want to get a larger size? You could even try a larger size, but it only takes 3,000 to pass the 50,000 test. You do this for a week, and you could have a reasonable chance of passing the test with very, very little drawdown against you because your stops are so tight. So this puts me at +8 for the day, 8 consecutive winning trades, which is where I really want to be today. So please take advantage of the Apex deal. If you want to come trade with me, come join me at Pass the Prop, or just join us at BK. If you want to learn the funda, take Kathy's fundamental course. It's a great course. It's an awesome course. You'll really, really enjoy it. So thank you so much, guys. I really, really appreciate it. All right, guys, everybody enjoy. Thanks a lot.